Well, we're so glad to have Tim Sloan here on the main stage, and I know you've been waiting with bated breath, but the other Tim Pawlenty, has just joined us, so he came in from Las Vegas. Next up on the big stage is Aaron Levie. He's the Chief Executive Officer, co-founder, and chairman at Box, which he launched in 2005 after coming up with the idea while he was in college. Aaron leads the company in its mission to transform the way people, business, and processes work so they can come and achieve their greatest ambitions. Please join me in welcoming Aaron Levie.
Cool. How's everybody doing? Awesome. So I'm Aaron Levie, CEO and co-founder of Box. Very excited to be here today with everyone. You might not be too familiar with us. We power secure collaboration for enterprises. So we're in over 60% of the Fortune 500. Many of you in this room are customers, so very, very excited to be here. So we work in a range of industry, including financial services. My personal relationship with financial services is a little bit limited. It comes down to this tie and the fact that I got rejected from an internship at Goldman Sachs in 2004, but I'm not bitter. So because of that rejection, fortunately, that gave us some time to come up with the idea of Box. So the summer of 2005, we actually launched the company, and what we do is we power how companies work and share with their information. And we started Box because we saw a handful of major technology trends that we thought were going to change how people would work. So at the time, while we were mostly on BlackBerrys, we did see that there would eventually be ubiquitous mobile access and mobile devices. We saw that in the future, computing would become very, very cheap and infinitely accessible, so we could build modern products very easily over the internet. And that we would be moving more and more to a networked economy, where people would want to be more connected, where transactions would happen digitally in a much more secure and seamless way. And so all of these things were the factors in 2005 that led us to creating Box, which now, again, has 70,000 customers, and people use Box to share and collaborate on their information. And that was disruptive to a lot of the traditional software and hardware companies in our space. But those same technology trends that we used as a disruptive advantage have actually changed every other industry. So some things that I think we already know, Uber was able to leverage those same exact technology trends to be able to disrupt the automotive and transportation industry. Airbnb is completely transforming hospitality. Netflix is certainly becoming the most important media company on the planet because of these technology trends. And of course, they're beginning to very significantly impact financial services. Products and companies like Stripe, Robinhood, PayPal, and so many other companies are reinventing what financial services can mean in the future because of these same technology trends. And so I think we all have sort of this insight that software is beginning to eat the world. It's going after every single market, whether you're in life sciences, automotive, healthcare, and financial services. And that means that all of us, all of our organizations, every company on the planet, have to become digital companies. So with that insight, I just saved you a couple $1 million from BCG. And so this means that every single thing about what we do has to begin to go digital. And so the thinking goes, and when we talk to our customers, the thinking is, well, if we could just build an app like Uber, if we could only have a real-time digital experience that was data-driven, maybe had a little flash of artificial intelligence, then our consumers would love us, and we would have this amazing digital experience, and then the sort of problem would be solved. But I think what we all sort of recognize and what resonates is that it's not that simple, right? It's not just about building that digital application or that digital experience. In fact, if you look at an industry that attempted to do that because of Uber, you look at the taxi industry, what they tried to do was sort of corral together the same workflows, the same business model, the same sort of dispatch organizations, that same process. And as Uber was coming to attack them, Uber and Lyft and other companies, they tried to modernize by just taking software and putting it on top of the existing business model and the existing structure. And guess what kind of software they ended up with? It looks something like this. So not really the modern transportation experience that we're used to. And that's because they were still limited by the fundamental dispatch workflow because they didn't have the sensors, they didn't have the technology to be able to make it much more on-demand and data-driven. And so you can't just put software on top of a legacy business model or a legacy business process and all of a sudden become digital. That's not clearly how it works. And the reason for that, and the reason why the taxi industry has failed and probably, unfortunately now it's a little bit too late, is that Uber isn't an app. It's not just an app on your phone. It's actually an entire company. And more important than it being a whole company and a whole operation is that it's a modern company. right? The way that people at Uber work, the way that they collaborate, the way they communicate, the ideas they share, the technology that they use. Tim just was talking about cloud computing. All of the platforms that Uber runs on are fundamentally modern. Their business process is modern. And so when we're attacking these digital strategies, we're looking at the wrong thing in many cases, because it's really Uber, the company, that delivers Uber the experience that we love. And so then that shows up as a car on demand that has all digital payments, and you don't have to book it in advance. And they're no longer limited by the scarce supply of traditional taxis, because any driver can join the network. So they fundamentally rethought who can actually be delivering that transportation. And the standard thing, every time you get out of an Uber, you rate your driver. That's so that way you don't have to complain about your experience anymore. They're using data signals to be able to actually solve their supply and demand and employment challenges, because now they know which drivers are the best on the system. So Uber, the company, was able to deliver this modern digital experience. Now, because they have all of these capabilities, because they have this data, because they're built on these modern platforms, Uber doesn't even care about taxis anymore. Now they're able to go after anything that needs to move physical assets around. So they're going after things like trucking and logistics. They're going after food delivery. They're going after shipping. So they can now go after any industry that is not prepared with the right technology platforms, the right data, the right intelligence, because they are fundamentally a modern company, not just an application. So how is financial services doing in this respect? How are we transforming as financial services institutions? Well, the obvious thing to do to go check on how we're performing is to go talk to millennials. That's the standard approach. And many of you have probably seen these statistics. This isn't particularly new, but 53% of millennials, when surveyed, said they don't think their bank is offering anything different from other banks. So there's limited differentiation between the actual products and services that are coming out of the traditional parts of this industry. 73% said they would be more excited about banking with Amazon, Google, or Apple. So that's obviously an important statistic to pay attention to. And most interestingly, I was pretty surprised by this one, I have to admit, 71% would rather go to the dentist, they said. So I don't see how this could be true, but I read it on the internet, and so thus it seems reliable. So what's going on? Why is this happening? Well, the issue is that so much of today's quote-unquote modern financial services aren't actually very modern. Just think about the workflows of your existing products and of the existing business, and trying to imagine how we've actually taken them digital. Well, here's just one small workflow as an example. This is a mortgage process. And the mortgage process is obviously very long. There's a lot of steps and procedures, a lot of regulatory compliance issues, a lot of people that need to get involved. But what's happened is so many of the products in this industry have just been about writing software to try and hide the complexity of this process from customers. But then what happens is any part of the process that's not automated, that's not data-driven, that's not digital, then shows up as being now taking people offline and off that digital experience. So if you have done a mortgage recently, or if you've done one of these heavy transactions, you still have to collate your documents, you have to fax them in, or you have to FedEx them. If you have any issue in the process, you still probably have to talk to an operator during hours of operation and business hours. And that's just the front-end consumer experience. Now imagine the back end. How many of your processes that are delivering that loan or that mortgage are still manual, are still paper-driven, still require all of that extra signal to be done by people as opposed through technology? And the reason that I at least think this is happening is I think digital is often seen as a channel to distribute your existing products. And this goes all the way back to online banking days, right? So think about when the first internet banking services came to be. Well, this was seen as a distribution channel for our traditional banking products. And so when mobile came out, it was yet another distribution channel for the traditional banking products or financial services products. And that's a fundamental distinction from how digital companies think about the problem. They're not taking, nor do they have to, existing products and delivering them through digital experiences. They're saying, what is the modern experience that should exist because of digital? how do we work backwards from that? And then what is the process? What is the business model? What is the architecture? What is the technology I need? And that's why, for instance, in financial services, but really any industry that's seeing disruption from technology, we're able to see what the process could look like if it were fundamentally rethought because of these digital experiences. That's then leading to the reason why digital technology and FinTech is so exciting. That's why people have such great experiences that you can't see on this slide right now that were really great experiences where people loved their FinTech companies. There's a bunch of tweets. I'll send it to you offline. So digital is not a medium. And financial services companies that are modern, FinTech companies or any disruptor, Uber or otherwise, they don't treat digital as a medium. It's not a distribution channel for an existing product. It's the foundation of every single touch point that your customer has with your product, your service, your company, every interaction. That's the fundamental distinction that we tend to see. And this even ripples into the offline world. Imagine your physical branch, the physical bank. This is what one of my local banks tends to look like. It's no wonder that we think these things are going away. Nobody wants to go in there. It actually is indistinguishable from my local DMV. So that is the problem. It's not that people don't want to go outside and we just want to wear VR goggles all day long. It's that the physical world has never been that great to experience, at least in modern times when we know what is possible because of digital experiences. Now, contrast that to what Amazon is doing. They've actually said, no, actually the physical world isn't going away. In fact, we can deliver better experiences in the physical world in some cases than we can the online world, but through digital technologies. And so now if you are familiar with Amazon Go, it's their modern grocery store. You go in, you take anything you want, you leave, they automatically charge you because of sensors, artificial intelligence, computer vision, and the fact that they have all of your data on file, all of your credit card information on file. So they can do that because they're a modern company that's approaching the retail experience in a very digital way. So, all right, fairly straightforward. So why is it that delivering these digital experiences is so difficult? Well, this is the part where obviously it's not so simple. It's because if you're big and successful and you were founded before the year 2000 or 155 years ago, it's that you've optimized your business model, that incumbents have had to optimize everything about their organization, their people, their processes, their talent, who the leaders are in the organization, about those that could succeed in the industrial economy against their industrial competitors. So that meant you got really good at deploying physical branches. We got really good at distribution, so it was better to bundle products together so we could sell more and more products to customers. We got really good at regulation and compliance that was built for an industrial era. And, as you saw from that millennial survey, there's little distinction between banks for millennials. So that means the only way that you compete is by generating more margin. The way you generate more margin is through process efficiency. Well, the fastest way to deplete innovation is by just focusing on the process and focusing on optimizing the process. So what do we do about this? Well, the first thing is it's useful to then learn from the digital companies that are actually leading this charge. And that's because the rules have fundamentally changed. And so those things that you got really, really, really good at are now actually anchors on your strategy and on your business model and on your operating model. So what can we learn from Silicon Valley? What can we learn from modern digital companies? Well, here's the first thing. In Silicon Valley, we don't think of the app as our product. It's an artifact of the overall customer experience and of the overall product. So we need to stop just focusing on the app and that digital interface, but think fundamentally about what is the product that we're delivering that's different because of the new era that we're in. How is it fundamentally different than the product that would have come before if we didn't have digital? The only way that we can deliver new products, though, is because in the Valley and software companies, we have new business models. And I'll get into that in just a second. But the only way you can deliver that new business model is if fundamentally you have a new operating model. And so the challenge is that it's actually the things that we don't see in the digital world, the operating model and the business model, that enable the digital experience that is so disruptive. And so we have to actually look behind the scenes to understand what we can do to begin to modernize. So let's start with the digital operating model for 1 second. The first is, if you're in a space like what we're in at Box, there's so much competition. There's so much change happening in our industry. Every single week, there's a new event that occurs that we have to respond to. So we fundamentally have to be focused on agility and how quickly can we respond to these trends that are going on constantly in our space. The only way we can do that is if we have a flat organization that's able to share information as quickly as possible through all nodes of that organization. We can't have information be delivered through a traditional hierarchy of the corporate structure. We would not be able to respond quickly enough to what's going on in the business if we had that traditional approach to how information flows. And that's then because we can be more decentralized and thus flatter because of that. This is not possible with most of the traditional IT systems that traditional incumbent organizations are running on top of. You just can't do this with legacy technology in most cases. And so if you actually look under the hood of how most startups work and operate, collaborate, how we share information, how we work together, we're using a completely different technology stack than what incumbents are using. That shows up by then enabling that flatter organization to be able to share ideas, to be able to work more effectively, make better decisions. And only when you start to treat IT as a growth driver as opposed to a cost reducer, that's how you actually then get to become data-driven. Then you can invest in artificial intelligence to be able to remove people out of the process when that's not enabling the customer experience. So once you have the digital operating model, now let's look at the digital business model. What we do at Box is we sell an ongoing service. We don't sell hardware. We don't sell software that you control, that you own. And that's basically the biggest trend with cloud computing is you don't need to buy assets. You rent either experiences or outcomes. So you fundamentally only pay for what you're getting. And instead of us bundling all of our technology and all of our products together, we deliver them as individual services. So we are modularizing our technology and our products so customers can pick and choose any part that they want without being a customer, without using any of the others. We're already familiar with things like renting assets and network effects. That's what Airbnb, Uber, Lyft, and others are driven by. But this is another disruption, is it's not about generating as much economies of scale in your assets as much as how much can you leverage from the other technologies, the other products and services that are out on the market. Only then, once your operating model is modern, once your business model is modern, does it really make sense for you to be able to deliver great digital experiences that customers are going to love. Because in the digital world, you can't just take that complex bag of services and products and deliver it through a digital medium. We have too much choice now. There's too much information for consumers. So products have to be so much simpler to be able to actually get adoption and to be able to get consumption. And when you have that fundamentally different operating model, then you can deliver rapid innovation to customers. The reason why traditional car companies are in such a difficult position now is because the speed that Uber innovates, the speed that Tesla innovates, they can do software updates in a couple of days that ripple through every car of technology they wrote a couple days prior. So that speed of innovation is unstoppable if your organization, your business model, is used to 3-year or even 12-month-long cycles to be able to get those products into market. So now you take those 3 areas, you put them together, and they continue to reinforce each other over time. And this is what is so pernicious about digital, is the companies that get this right early, there's a compounding advantage that you just can't catch up with by investing the dollars or hiring the people to try and match this. Because the companies that have more data, that have more customers, that changes their operating model. The operating model then influences updates to the business model, which then reinforce in the product. And that cycle continues over and over and over again to the point where it's a really unstoppable position. And so even if today it doesn't look like your business is under attack or it's under duress in any particular area, it's probably not that hard to imagine a future where, oh God, OK. There's a Google logo before insurance. So it's probably not that hard to imagine a world where Google could use all of its data and all of its customer experiences and deliver an insurance product. Or where Facebook, by connecting 2 billion people around the world, could actually just do payments on their own rails. Or Amazon, because of all of the e-commerce information, all the credit information, could deliver a loan product. And now it wouldn't be about the small fintech startup that is at your heels. It's actually about the world's best enabled technology companies with modern business models, modern operating models now coming after this industry. Would your business be prepared? Would this industry be prepared for that kind of shift that would be nonlinear and really out of nowhere? So here are a couple things that I would think about, and what we talk to customers that we try and pay attention to. It's just a couple quick questions to be asking yourself. The first is just that basic one. Is digital a distribution channel for your existing products? Or have you really rethought the product from the ground up in what the digital world can enable? This is the car issue, right? Uber doesn't distribute taxis via or cars via a digital interface. It's transportation on demand. And so when car companies are stuck with their legacy business model of selling the vehicle, digital interface on top of that's not going to help them. The product has been rethought for the digital era. The second is your operating model compensating for a lack of data or signal? Are you having to put too many people against a problem, too many manual processes against a problem because you just don't have the data, you don't have the signal that can help automate that process, that can make it more seamless for the customer and make it better for your business model? This one is one that we pay a lot of attention to. Is your IT strategy focused on making today's business more efficient, or is it really actually setting up for future growth? The easiest way to solve this one is look at where your CIO's time is being spent. What technology vendors are they working with? What organizations are you partnering with? What types of technology is being deployed? If it's the same technology from the same brands of the past multiple decades, you're probably not getting all the right innovation. You need to be able to marry the legacy technologies with modern technology stacks as well. And is IT fundamentally enabling employees to move faster, move more quickly? Or is security and compliance or risk sort of preventing that and slowing you down? And are all of your digital partners speeding you up, or are you slowing them down? This one we see a lot. You have a big institution, a big company, and once it partners with the digital company, the big company doesn't get any faster. It's just the slow company gets crushed, the smaller company gets crushed. Really be thoughtful of all of your labs divisions that are out in the valley, all of your investments. Are you using that speed to go into the core of your business to help you speed up? Or is that off to the side, and are you really just destroying that technology partner? And then finally, is your organization designed to compete with just your peers? So the companies that you've always competed with for 20, 30, 50 years? Or is it ready to respond to digital disruptors, which would include technology incumbents? Do you have an organization model? Do you have an operating model that can adapt at the pace that Amazon, Google, Facebook, and others are able to move? So those are some of the things that I would be paying attention to as you think about your digital strategy. So in closing, it's really not about just writing a better application. It's not about using data to change the user interface just a little bit. It's about fundamentally rewriting your company to deliver digital products in the modern era. Thank you very much, and have a good day.